Okay, hello and welcome everyone. Thank you for joining us today. My name is Alexa Milne with CFIB, and as always, we're very happy to be here presenting our weekly COVID webinar. If you're new to the GoToWebinar platform, or just for a quick reminder, I have a few technical notes to make. On the webinar pane, this is the blue or orange flower icon on your screen. You'll see the handouts pane. Here you'll find today's presentation. You'll also see a section called questions, and this is where you can type your questions for our panelists today, and we do our best to answer as many live as we can. Following our presentation, you will receive a recording of the webinar, so there's no need to worry about frantically taking notes, and it will always be there for you to go back and reference. And with that, I will now introduce Laura Jones, our Executive Vice President and Chief Strategic Officer. Thank you, Laura.
Hello, everyone. Good morning or good afternoon, depending on what part of the country you're in. My name is Laura Jones. I'm the Executive Vice President of the Canadian Federation of Independent Business, and we are pleased to bring you our 38th weekly COVID webinar. These webinars, many of you have been with us for all 38 weeks, and so you know them well. But for those of you who are new, these webinars are really about trying to keep you up to date and informed and get your questions answered on the key government support programs to help with the COVID-19 situation. And so together with my colleagues, Corinne Pullman, who I'll introduce now. Corinne is our Senior Vice President of National Affairs and Partnerships in Ottawa. She's an expert in all things to do with the Ottawa government. She's based in Ottawa. I'm in Vancouver. And Rachel is also joining us. Rachel is our business counselor, and she takes many of the calls through our helplines across Canada. And I don't know if each of you want to just say a quick word before we get going with today's webinar. I know we don't have as much new this week, Corinne, so you might want to mention that, but there's still just so much to know that we thought we better come back and keep at it.
So as Laura said, unfortunately, we don't have too much new, a little bit new, but not too much. The federal government is still in its parliamentary break. They'll actually be back next week, so hopefully we'll have more to share in the next week or so. But we also know that tax time is coming, and you have lots of questions around that, so we'll have a lot more to share on that in the coming weeks as well. But we're looking forward to sharing at least a bit of a recap on some of the big programs that are currently out there and anything that's new in them right now.
And Rachel, do you want to say a quick hello and maybe even mention a couple of the things you're hearing on the what's hot on the hotline this week before we dive into content?
For sure. Hi, everyone. We're definitely hearing various amounts of questions coming out about the COVID programs. I know a hot topic is how are things going to get audited? How should I prepare my taxes this year? All over the place. And so probably one thing that I'll mention later is it's better to be prepared and get some of the stuff done as early as possible. So if you find a mistake, you can get your help either from CFIB or an accountant, earlier than later.
And Rachel's one of our fabulous business counselors who takes calls across the country. We just had the final tallies. I think we took 78,000 calls from business owners across Canada last year, which is typically we would be more around 40,000 calls to give you some sense of I know you all know what we're dealing with, but anyway, it's a great privilege to be able to help where we can. And so I am going to call Corinne and Rachel back in just a few minutes, but I'll get through some of the introductory content, and then we'll get straight to the programs. Just want to remind everyone about our commitment to keep things as up to date as possible on our website, and we are working, I think I mentioned this on last week's webinar, we're working to kind of improve the navigation. I mean, like the FAQ section of our website was getting a bit bogged down just because we kept adding, your questions. And so we're trying to make it a little easier to navigate. So you'll notice it looks a little bit different if you're going to our website for information. And also, I just want to make sure you know about that helpline number. So if you do want to call our counselors, you're welcome to do that, of course, at any time. That's what we're here to do, is to help you. So that number is there on our screen. The only thing I would say is that, and we hear this from our counselors too, that it's frustrating sometimes because we don't always have answers to the questions. Often that's because government doesn't have straight or clear answers, and it's very confusing to sort this this out, but we're doing the best we can to get you the clearest, best, most up-to-date information. And these are some other avenues you can go aside from these webinars. So on the next slide, we always like to start with a few quotes just because, you know, we're in such challenging times. I can't believe we're number 38 of these webinars. I guess that means we're in month 10 of really challenging times. So we like to put a little inspiration from those who came before us on these. And I do like the accept finite disappointment, but never lose infinite hope. That's a really nice Martin Luther King quote that I think we're bringing back from a previous webinar, actually. And I love it's quite funny when you're at the end of your rope, tie a knot and hold on. I know many of us are feeling moments or days or even weeks and feeling that we're at the end of our ropes, and hope shape the future and learn from yesterday, live for today, hope for tomorrow. So a lot of hope in there for these challenging times that we're in. In terms of what we're covering today, we always go over what's new. As I mentioned a minute ago, there's not as much new to update you on, but what we would like to do today is give you that overview of what CFIB is still advocating for. And so we continue to push governments on a number of fronts with the support programs, whether it's getting access for businesses, newer businesses, to the wage subsidy or the rent subsidy, fixing the holdco, opco issue that still plagues the rent subsidy, and any number of other issues that we've heard from you. So we'll just give you an update on what we're lobbying for, and then we'll get to your questions and hopefully answer as many as we can. We also want to clear up a little bit of confusion on the CEBA program that came maybe out of last week's webinar, and we committed on last week's webinar to get back and get that clarified. So Corinne will speak to that in a moment. As you know, we've been tracking the recovery, and today we have our latest small business recovery dashboard numbers out there. So what we know is fewer than half of you are fully open, 36% of you are fully staffed, and less than a quarter of you are at normal sales. These numbers are quite low compared to where we were in November, I think reflecting the lockdowns in several provinces. So in November, we had 67% fully open, so we're a full 20 points off where we were in November. And for provinces like Ontario, these numbers are quite a bit lower. So in Ontario, you've got only 37% fully open. So these are our national numbers. And so we continue to keep this updated and to let the public know and politicians know how serious the situation is for small business, and to continue to advocate that the supports that you need are in place, and to advocate that we get businesses open as safely open as quickly as possible so you can get back to making sales, and also to advocate with customers and consumers to think local first. So that's the purpose of this. You may also see us in the media today because we released a report of the number of businesses at risk of permanently closing, and that number has gone up from, we estimated, 1 in 7 in the summer, and that number is now 1 in 5. That's, again, to underscore with governments and the public how important it is to get the supports right and how important it is to shop local. So I thought I'd spend just a moment on that, on the research side of what we're doing. And the next slide. If we go to the next slide, Corinne, I think we're going to bring you up to talk about what's new this week. I know there's not as much here, but there are a few new things to talk about, and then I'll be back when you need me.
Sure, great, thank you. And hello again, everybody. So as we said, not much really big news, but just wanted to give you a reminder for those of you that joined us last week. We gave you a fairly thorough overview of the Canada Summer Jobs Program. Just a reminder that those applications are open until January 29th, and that there is a link there to get more information. So if it is something that's of interest to you, you should get on it fairly quickly. It is a bit more generous this year, temporarily for the COVID year, to allow people to get more of a subsidy. It's going to be up to 75% of a subsidy to hire students. You can also use them part-time, not just full-time. You can also keep them well beyond summer into February of next year. For example, you may want to have them full-time over the summer and then maybe part-time during the school year. They're going to allow you to do all those things, so be sure to try to apply. I already had one question from one of you out there. I'm just trying to look, I guess it was Andrew, asking, oh no, sorry, not you, Andrew, somebody else. Anyways, but asking a little bit about why there's a limit of 50 employees or less. I guess I don't know if there's any reason particularly for that. I think the government was just simply trying to keep it to under a certain amount and had to have a cutoff at some point, but it is certainly something that we can suggest they look at more closely. I think the idea is to keep it sort of among smaller companies, and that's generally seen 50 and under is generally seen as a smaller company. But I think, you know, obviously during this COVID times, there's maybe something that may be of interest to some of you that may be slightly larger than 50 as well. So it's something we can certainly inquire further about. In addition, of course, the big news has still been the very many different restrictions that are in place across Canada. We did have a little bit of good news in that there has been some loosening of restrictions in some parts of Canada. For example, in Alberta, they are now allowing personal and wellness service businesses to do appointments. So they are allowed to reopen by appointment only. However, other types of businesses do, like restaurants, do remain closed other than for curbs for takeout and delivery. Nova Scotia has opened up most of its regions now again, so that almost everything is reopened. Of course, not back to normal. There's still social limitations and so forth in place, but businesses have reopened. And Manitoba has also signaled that they will be starting to lessen some of the restrictions in some parts of that province as of, I think, today or tomorrow. So that's also moving forward, but they stay under a fairly strict order still. Unfortunately, New Brunswick is going the opposite direction. 4 regions now in New Brunswick have moved into a higher restrictive area known as a red zone. So things are getting, unfortunately, a little bit more restrictive for businesses in New Brunswick. So those are sort of the changes on that front. There was some announcements today or yesterday in Ontario as well, where they reopened some of the schools in some parts of Ontario, but not yet in the bigger urban centers starting next week. So things are starting to move, but it is still, unfortunately, from a business perspective, fairly restrictive still in many parts of Canada, but not all. The Ontario Small Business Support Grant was launched. We talked about it last week. Someone on the webinar, so thank you, mentioned that was going to be launched last week, and it certainly was. So any for you in Ontario who are interested in getting that grant, you certainly can do so, and their link will take you to that particular grant application as well. Again, and other news, I think it would be hard not to know this has happened, but of course we do want to recognize that there is a new president in the United States. It does potentially have different implications for Canada. So for some of you in Western Canada, there, you know, obviously the XL Keystone Pipeline has been basically taken off the table, which does have an impact on some of our colleagues out in the western parts of the country and those in the oil and gas sector. As well as, you know, on the trade side, we don't know which direction it's going to go, but we do have a new Canada, US, Mexico agreement. And I think a president that hopefully won't be putting tariffs and so forth onto Canadians' goods and services, but we'll have to wait and see. And it's always a bit of a guessing game when there's a new president sworn into the United States. The only other thing I wanted to mention is that Newfoundland and Labrador did launch an election. And so they are currently in campaign mode in Newfoundland and Labrador, and they're going to have an election on February 13th. So that's really the extent of what's new. So we'll sort of move on a little bit into some of the other things that we wanted to talk about today. Laura, is there anything else you want to add?
I'm just wondering, Corinne, if you want to say a quick word. I know there's speculation about a federal election, and
yeah,
so that obviously would create some challenges in some ways. And I'm just wondering if you want to say anything about what you're hearing on the ground in Ottawa.
Sure. So yes, certainly there has been speculation. You have to keep in mind, of course, that we are living in the minority government situation, even though, you know, given all the spending and everything that's been happening, it doesn't necessarily feel like a minority government, but it is. And so generally speaking, minority governments never make it past 2 years before an election. And we are coming, this fall will actually be 2 years, believe it or not. So there is a lot of speculation that they may call an election this spring. And we'll have to wait and see. I suspect they're watching things like vaccine rollouts, which can get political if it's not done well. And of course, there's been a bit of a hiccup on that front, which may, prevent them from wanting to go too quickly. But I suspect we will have an election this year, whether it's this spring or in the fall. That's, I think, the big question mark we have at the moment.
And the reason we'll be paying close attention to that is obviously it can affect the support. I mean, we're nonpartisan, so we don't take sides on who should win. We criticize good policy or bad policy, and we compliment good policy as equally wherever it comes from. But Corinne, it can have an impact on if there's legislation needed for program changes.
Correct.
That can be put on pause. So we're watching that carefully, right?
Yeah, that's exactly right. So that's one of the things we'll have to watch and see. Great. So moving on, we'll talk to you a little bit about some of the programs, a bit of a reminder of where things are at today. If you have more specific questions, please feel free to ask them, but we're really just going to give you a quick snapshot on each of the programs and then a bit of what we're still looking for in terms of improvements to those programs. So first up is the Canada Emergency Wage Subsidy. We are currently now in period 12. It actually started just last weekend, January 17th. It'll run to February 13th. And for these periods right now, 11 to 13, you can actually get up to a 75% wage subsidy. So they did slightly increase it, but it's really only applicable to those people who have much higher revenue losses. There is a bit of a formula there to help you understand how the subsidy is calculated, which is basically they haven't changed the base part of it, which is that it's 0.8 times whatever your revenue loss is up to 50%, which is a maximum of 40%. And then they add whatever your revenue loss is above 50%. So say it's 70%, then you multiply that extra 20 by 1.75. And that then can give you another 35% on top of the 40, which brings you to 75%. If you have more than a 70% revenue loss, then you will be able to get the top subsidy right now for this period 11, 12, and 13. There were some slight changes that were made to the reference periods that you use to calculate your revenue losses, though. So this is the one thing that did change. We have talked about it in last week as well. And this also applies not just to the wage subsidy, but also to the rent subsidy. So as you know, when you apply for these subsidies, you have to sort of show the amount of revenue loss, and you have to use reference periods for a certain month compared to the same month in the previous year, or to your average revenues for January, February of 2020. So what they did is they sort of moved the reference periods back a little bit. So because we were now ending these periods in the middle of the month, it was becoming more complicated to use that month as a revenue loss period. So they moved everything back. So for the period that just ended, period 11 on January 16th, they've moved it back to actually using the revenues that you earned in November or December 2020, and then compare that to revenues for November or December 2019. The period we're now in, period 12, you will use December 2020 or January 21 and compare that to revenues for December 2019 or January 2020. And then, of course, the same, this sort of moves up a month for the third period, which ends March 13th, where you're going to look at January 2021 or February 2021 and compare it to January 2020 or February 2020. What happens after March is still the big question mark. Then obviously we also then kind of get into the more difficult revenue periods as well. So that's the part that we just don't know at this point in time. So that is part of some of the things that we're pushing for the government to do, is to sort of get a bit more clarity out to businesses sooner rather than later on what the reference period, what it will look like, or the whole subsidy will look like from April, May, and June, which will be starting after March 13th. If we move to the next slide, just a few things that we wanted to sort of let you know that we're still trying to seek from government to improve the wage subsidy and make it more available, I guess, and attractive and usable for small businesses across the country. First of all, of course, we'd like them to actually top it up more to 90% through something called a lockdown support measure, which is something that they use for the rent subsidy. So right now with the rent subsidy, if you're in an area in which you're required to shut down due to public health order, or part of your business is required to shut down, such as your dining room has to close, then you can actually get potentially up to 90% of the rent subsidy. We'd like that same kind of concept applied to the wage subsidy, especially as we go through the second set of lockdowns. So that's something we're still pushing strongly for. Again, the fact is that new businesses right now cannot access the wage subsidy or the rent subsidy or the Canada Emergency Business Account. So you're going to see us be pushing this a lot. This is one of our top priorities right now. There's been a number of new businesses that have started since beginning of last year. If you started a business, say at the beginning of March of last year or later, you're out of luck. You cannot access any of these programs. So we feel like there should be some way to do that. Some provincial governments who have now introduced their own financial support programs have made them available to newer businesses, which is good. It's a start. But we feel like that needs to be broadened out to help those businesses get through this difficult time. Just because they made plans and then opened their business doesn't mean that they aren't necessarily in need of some support to make sure that they're still there at the end of all this. We also know that those who pay themselves in dividends are excluded from the wage subsidy. So we've been pushing strongly for the government to allow a portion at least of the dividend revenue to be included, or to allow them to convert an equivalent amount of the salary or to a salary so that they can actually include it as part of the wage subsidy, because it sometimes makes a big difference. Because if you paid yourself a salary as an owner, you can be included, but if you pay yourself as a dividend as an owner, you cannot. That just doesn't seem to be quite fair. And then finally, we know that a number of seasonal businesses have been very worried and have now experienced the fact that their revenue losses are obviously going to be a lot lower when they're off season. So in the, say, October, November, December period. And as a result, the need for the wage subsidy doesn't necessarily go down, but the actual amount they're going to get is actually going to be going down. So many of these businesses didn't make as much money over the summer months as they normally would to help them through the winter. And now they're going to get less of the subsidy simply because the natural order of their business is not going to allow them to access it. So this is an issue that we know applies to the rent subsidy as well. And it's one we've been raising quite regularly with the government. So those are some of the things we're trying to do to improve the wage subsidy. If there are other things you think that we're missing, we'd love to hear from you on other ways that the wage subsidy could be improved. But we'll sort of go through what we're looking for with the other programs and how we want to see them improved as well. But please let us know if there's other things that you feel could be done to improve the wage subsidy, and we'll certainly add them to our list as well. All right, I think I'm going to bring back Laura, and she'll walk us through the rent subsidy and what's been going on with that particular program.
Yeah, and Corinne, you might want to stay up here too, because I know you're involved in this as well, and in the lobbying, as is Rachel. So we've all been, this has been a real team effort on the rent subsidy, which has been, I would say, one of the more challenging programs to get right, because we had this whole secret mess originally with lots of people shut out of the program. And I've had some questions from people already about whether there's anything to make up for that if you were shut out of that original program. And unfortunately, the answer is still no, although that's something we're advocating for. So we'll get to that in a minute. But just to run through the rent subsidy, we're currently in period 5. And so those dates, I believe, line up with the wage subsidy. That was they kind of wanted to put those two things on parallel tracks, although the rent subsidy hasn't been available for as long as the wage subsidy. So we're in period 5 on this, where we're further along on the wage subsidy. For the December to March, it's up to 90%. Now that's if you're eligible for that lockdown top up. There's the calculation for the subsidy. So there's a bit of a trade-off with these calculations, obviously, because they're more complicated than they were when there was just a straight cliff, but it means you're eligible for a wider range of revenue losses, and the rent subsidy you can qualify for at any level of revenue loss. So it's just, but the amount that you get goes down depending on the lower your revenue loss is. As I just mentioned, that next bullet goes through the, if you're shut down, there's an additional 25%, which can bring you up to the 90%. Okay, so this answers a question that someone has had already, which is when will you be able to request adjustments? So that is, we understand, starting in February. Corinne, I hadn't heard that from CRA yet, so that must have been a conversation you and Rachel had, that's going to be available in February.
No, it's actually up on their website. So
okay.
CRA has actually posted it on their website that if you have adjustments to make, that will be available in February. The ability to do that will be available in February.
Fantastic. So that actually means you can take it a little bit more to the bank, I guess, if it's on their website. So for those of you who are wondering when you can do those adjustments, February is the date on that. And if we go to the next slide, this goes through what we are looking for in CEWS. As I mentioned, we're looking for that retroactive relief for businesses that didn't qualify for SECRA. That's very much on the list. The arm's length, we hear you. Everybody's still contacting us about that issue, and we're working on it. We have a letter out to the finance minister, and we're trying to get a meeting now to follow up with what they intend to do about it. I mentioned last week that they're starting to get some questions from the media on this, which I think is very good news, because they pay a little bit more attention once the media starts flagging this as a problem. And it's a little bit more of a technical issue, not as straightforward to explain in the media. So I think that's good news that they're starting to get reporter calls on it. We have a few other outstanding asks. So under SECRA, if you didn't have a formal lease, but you could show so under the old rent relief program, if you didn't have a formal lease, but you could show a regular pattern of monthly payments that clearly were rent, you were eligible. Under this program, you're not. So there's some things like that that we're also trying to fix. And so this is kind of the list. The last one I'm going to actually just spend a minute on. There's an attestation that's required by the business owner to say that you are agreeing to pay your rent, your full rent, with your subsidy. The challenge we're having is that sometimes the subsidy is 40% of your rent, and then you can't afford to pay your full rent. And so we're hearing from some members that they're saying, well, maybe I shouldn't apply because I can't meet that criteria. And we're hearing both from landlords and from tenants that they'd like that to be changed, so they agree to, at a minimum, pay the amount of that you're getting in subsidy as rent. I've already had a couple of questions on this, and so we'll get to maybe that during the question period, but I know we want to do a quick run through of all the programs first. So that's the quick overview of CEWS. I'll turn it back to you, Corinne, on the Canada Emergency Business Account. And last week we had one of our accountant members on, and there was a bit of confusion around the when the loan is taxable, when the forgivable portion is taxable. So I know you've put that in red, and I know you want to put that in lights to clarify that for our members this week.
For sure, yeah. All right, so the Canada Emergency Business Account is probably the most used program out there. Over 800,000 businesses across Canada have accessed the Canada Emergency Business Account. It is, just as a reminder, that $40,000 interest-free loan, of which $10,000 is forgiven if it's paid back by the end of 2022. And if it isn't paid back, it really converts into a 5-year term loan with the bank at which you actually got the SECRA from. And you have to repay them the full amount. There's no amount forgiven if you are not able to pay back by the end of 2022. So the extra when I say 40K or 60K, that's the full amount you have to pay back. And the 60K actually refers to this additional 20,000 that was announced just before Christmas or before the holidays. That $20,000 extension that they're calling it also has another $10,000 forgiven. So you'll be able to get a total of $40,000 in a loan and $20,000 which can be forgiven if it's all paid back by the end of 2022. There are different streams of the CEBA loan. So there's the biggest one is the payroll stream, which is for anybody with payroll between 20,000 and 1.5 million. Then there is the non-deferrable expense stream, which is the next largest, which is for anybody who can't quite make the $20,000 payroll stream or doesn't have employees, but is still an active business. That one you have to actually prove that you have $40,000 in non-deferrable expenses, and there's a number of rules around that. It's quite complicated, and we've certainly done a lot of work trying to help members through the whole process, also lobbying the Export Development Canada and the Canadian government on finding ways to allow more of those expenses and how they're being defined. So that one continues to be out there as well. And then there's a personal bank account stream. So we know that there are a number of businesses that have actually run their business through a personal bank account rather than a business bank account. The original program required you to have a business banking account. And this now allows folks who have personal bank accounts for their business to convert them to business bank accounts and still be able to access the CEBA plan. You do, as I said, have to apply for your primary business bank. and you have to use that same bank to also apply for the extension. So we've actually had a number of business owners tell us who've applied for the extension that they've been not successful. And what this means, and we should sort of reiterate that if it says not successful, it doesn't mean necessarily you're not going to get it. It does mean, though, that the EDC is doing another review of your actual application, and there looks like there may have been some discrepancies between your original application and the information they've received from CRA, whether it's your business number or the amount in your payroll T4 summary. And this is mostly affecting people through the payroll stream because they were quick, and especially folks that were given the payrolls, who went through the payroll stream at the very beginning of the program last year. So there are, you know, not a majority, but a small group, but still fairly large of individuals who found themselves in this particular category of getting this sort of not successful response. As they go through the review of these particular applications, they are telling us, EDC, that it's going to probably take until at least the end of January before they have the system set up to try to rectify these situations. So like I said, it could be that you just had a number that was off between your CRA business number and what CRA says your business number is because of what we call the thick thumb syndrome. It could be that some numbers are off in another part of the calculation, or it could be that maybe you weren't technically eligible and now they're going to try to help you be eligible in a different stream. So there's a number of factors that are at play that they're trying to sort of work through. We're trying to put as much pressure as we can on the EDC to fix this quickly because we know many of you are waiting desperately for this extra amount of infusion of cash. So we are constantly, we were talking to them again late last week. We're trying to keep, Rachel is in touch with them whenever she is able to provide them with new information as to how they can speed things along. So we're constantly pushing them to make sure that they rectify the situation for those businesses in that situation. More generally though, and the biggest one, as Laura mentioned, is that we had some confusion last week as to when do you actually apply the amount that's forgiven to your taxes. Because the amount that is forgiven is considered a subsidy of some type that the government is providing to you, there was some confusion over whether you would actually apply it to your income taxes for 2020, because that's when you received the loan, or 21 if you got the extension to 21, or is it at the end of 2022 when you've just made the payback or not. We've had it confirmed. It is very clear. You must include the forgiven amount of the loan as revenue for tax purposes in the year you received the loan. So for most of you who got a CEWS, it'll be 2020. So in this particular upcoming tax filing season, you will have to include it as part of your revenue. May not be a bad thing because your revenues may have been down anyways, and maybe this is the time to include this type of revenue, but that is the plan. Now, if for some reason you can't pay back the loan by the end of 2022, you will be provided credit by CRA at that time for the fact that you had to pay taxes on it in 2020. So that is how it's being handled by CRA, and that is the final answer, we promise. And that's the way it should be done. Technically, there's probably ways you can get around that, but you need to talk to your accountant. It's more complicated. This is the simplest and easiest way to make sure you're you're following the rules set out by CRA.
Brandon, I'm just going to sneak in a question here because it's coming up a lot. Manny and Joanne have already asked about this, and it's with respect to the programs. You know, the question is, do we know whether CEWS and the rent subsidy are going to be extended past June 2021? And I know we don't know that yet, but you might want to speak to the advocacy that we're doing around that, including in our pre-budget. And the same for CEBA, right? Will the CEBA loan be increased? It's sort of a general question about all these programs. The pandemic is going longer than anybody imagined. We thought we'd be in better shape by now, but it still looks like we're more like Q5 of 2020 rather than 2021. And so maybe you want to just speak to that and give everyone a sense.
Yeah, you're scooping us a little bit. That's on one of the slides coming up. so we are, yes, so we are advocating as well for extensions on both the CEWS and CERS, which are now only going till June. So we are actually pushing government to extend those to the end of the year, or at least further on in some form. Whether that looks like, I don't know, as potentially even a economic recovery initiative. As you know, the federal government has committed to spending quite a bit of money on economic recovery once we're in a position to start figuring out ways to make sure we bring the economy back. We believe that this is going to be an important part of that. It may not be in the form we see it today, maybe in a different form, but something that helps supports businesses, because you're not going to be able to recover immediately. It's going to take time for people to come back through the doors and start spending money at the businesses. So we believe it's going to be important to have some kind of support out there for those businesses that still really need it till at least the end of the year. That is definitely on that. But when it comes to the CEWS extension, and if we can go to the next slide, one of the things we're certainly advocating for is that as we go through an extended period again of lockdowns, that government consider yet another $20,000 added to it, so for a total of $80,000 for those that may need it, of which a portion will be forgiven as well. So that's another one that's high in our agenda, especially if we're sort of continue in this state for another 6 to 8 weeks. I think it's something that we have to at least get government to recognize. That businesses still have bills to pay, they still have rent to pay, they want to hold on to their employees, and any extra cash that they can keep is going to be important. Debt loads are rising as well, so these are ways to help lessen those debt loads, so when we come out of this, it won't be as big a hill to climb. So it's definitely part of what we want to continue to push for. In addition to that, on the CEWS piece, as we talked about, we want to make sure that new firms and any business that doesn't have a business number prior to March 1st and sole proprietors can all access CEWS. We continue to push for those folks to get into that. Again, I talked about those folks who are getting the non-successful responses on the CEWS extension applications. We've been continuing to push hard for them to resolve that as quickly as possible. Under those that are on the non-deferrable expense stream, one of the biggest barriers that we see is there is a requirement for you to have a contractual obligation in place prior to March 1st, 2020 in order for a non-deferrable expense to be allowed. And that has become the biggest barrier for a lot of businesses to be able to access the non-deferrable expense stream. We believe it's a very arbitrary decision, that there are other ways to sort of provide evidence that you have an ongoing non-deferrable expense without having contractual obligation in place. And we'd like them to sort of look at that. And finally, allowing businesses to switch banks in order to access the CEWS is going to be important as well. This is especially true for the CEWS extension. We are getting a number of calls for businesses that have been what they call in the industry demarketed by their banks. So basically the bank has made a decision to tell them that they can no longer provide them with financial services and to go find another bank. And so those businesses go find another bank, but because they do that, they're not be able to apply for the CEWS extension because they're no longer with the original bank that gave them the CEWS loan. So we believe this is unfair as well. It's no fault of the business owner that they got delisted or demarketed by the bank. And so we're pushing hard for them to come up with solutions for those businesses, maybe on an exception basis, that they can get permission to apply for the extension at a different bank if they're in that situation. So those are all the things we're still seeking to get. And hopefully we can get government to listen to help those businesses find themselves in those situations. Again, if there's something we're missing, or you feel that there's something else that could really help to improve these programs, whether it's CEWS, CERS, or CEWS, please let us know, either here today through comments or through our business helpline, through our surveys. All of those are avenues and we read them all. So we would really welcome that.
Yeah.
The last slide, yeah.
Sorry, just really appreciate just a comment on the surveys, that just really appreciate the feedback that we're getting through that. And one result that I think speaks to what we've been talking about is we asked on our last survey that we're just releasing some of the results on now, do you agree or disagree that your business's survival depends on the support programs going through 2021? And 70% of members agreed with that statement, which is pretty sobering in terms of where we're at in terms of the economic condition. But survey results like that are very, very helpful for us as we're advocating for the programs to continue past June. And I just wanted to make that point because we are getting a number of questions on that.
Great. So I think one of the last slides and the next one is just a few other issues. We've already talked about some of them that we are still pushing strongly for. As I said, understanding ASAP as soon as possible what that April to June period is going to look like for the CEWS and the CERS programs, extending it beyond June, expanding the CEWS loan, The other things, though, we're pushing for are deferring the filing and payment of income taxes, both the corporate and personal. We're sort of in a similar situation as what we were last year at this time, or a little bit earlier than it was last year at this time, and we were able to get deferrals then. And I know for some it'll be a bit of a breather if they could have a bit more time to potentially get their taxes together, especially given the complexities that's going to be included in taxes this year. So we've already started advocating for that as well, and asking if those deadlines and filings and payments can be delayed at least till September, as they did last year. Same thing with GST, HST. We're starting to get some inquiries. People are worried about cash flow if they have to pay their GST or HST in time, potentially moving that as well to at least the end of June, which is what they had done last year for those that had to pay between March and June. And finally, as we talked about, there is, the government has already signaled that they plan to spend up to $100 billion on economic recovery once we get to that point. And we want to make sure that some of that is being spent on small business initiatives to help many of you get back up and running in a way that you're not feeling bogged down by debt. And some of those things that we've been pushing for are things like payroll tax rebates to incent hiring. The fact is CPP did go up at the beginning of January. And if there's ways that we can somehow, offset those costs in some way, that may help in terms of bringing people back. Some tax forgiveness maybe to help reduce debt loads. I think that would be a big one. Not sure government necessarily will go for that one, but I think it's important for us to put it on the table. And of course, we're always pushing for reductions in red tape. In fact, Laura, you may want to talk a little bit about our plans for next week and what we're doing on that front.
Yeah, thanks, Corinne, for that plug, because next week is our 12th annual Red Tape Awareness Week. So CFIB for some time has understood that your top concern is taxes, but not far behind that is red tape and government bureaucracy and everything from frustrating process. Like I know many of you in Ontario who phoned the helpline, for example, early in the pandemic to find out what you were allowed to do, were on the phone on hold for hours in some cases, and then only to be, the helpline assistants would regurgitate what was on the website. So, you're trying to get clarification on the confusing language on the website, and the helpline folks weren't empowered to do more than regurgitate that information. So it's things like that that constitute red tape, unnecessary rules, process, bad customer service. And we put a spotlight on that every year, and we're doing the same this year. And also saying to governments that some of the things they did really well, like approving patio permits in 48 hours or less for restaurants to help them survive, that they need to keep on keeping on in that kind of mode of thinking. But as Corinne was saying, your examples of what you want and need, whether it's on the tax side or red tape reduction, very, very helpful for us, because I think there is some openness right now. Governments, as they're going to turn their attention soon to recovery, they're going to want to know, well, what do we need to do to best support business? So feel free to keep getting those in through all the various channels, whether it's through the chat on this webinar or our surveys or our helpline. Much appreciated. And I think we'll go to the next slide with that. And we're just going to get to questions quite shortly, but wanted to let you know that we've got, on some of our upcoming webinars, we've got a guest on the 28th from the Canada Payroll Association to talk about the T4 changes in the PD27. So that's, again, we're trying to bring in guests that are really on point with what the questions that we're getting through the helpline. February 4th, we've got CRA as a guest to help answer your questions on tax filing. And then CRA is hosting their own webinar for businesses, and the link is there if you want to go to CRA's own free webinar that they're doing. And I guess they've got an already recorded one, and there's a link there as well. And then the 2020 T1 package, Rachel was saying this is a hot question on the phone lines, and that is now available at canada.ca. So hopefully this makes things a little bit easier for you, and you know what's coming up. Next slide. And brings us to my important tip that I think I've been 38 weeks in a row given to everybody, but just to keep a little bit of a journal, and that includes your key questions or information, frustrations with the programs, answers you're getting from government on helplines, whatever might be useful. So anything that you think you might forget to remember, it's good to keep in a little journal. So that's an important tip for those of you that are new to the webinars. That has been a lifesaver for some, I know. Okay, and on to the next slide. This is where we've got our helpline, and I'm going to call Rachel up, and Rachel, Corinne, and I are going to get to as many of your questions as we can. We've tried to answer some of them along the way, I know. And so, but I might turn to Corinne and Rachel, who have been looking at the questions, and get you to kick us off here, and then I'll throw a few in. Rachel, do you have any that you're dying to answer?
Okay. I feel like I've been going fast and just trying to answer as many as I can.
I can put one to you then. We're getting some on rent. So why don't you and I try and tag team the rent questions. What's the latest on the holdco being able to apply? Shelling is asking us. And so, you know, our recommendation to simplify that route for the holdco has not been accepted yet. There is a pathway, but do you want to talk a little bit about that?
Yeah, I'll try to be a little bit more clear about what that pathway kind of looks like. Essentially, if you have a non-arm's length revenue from your opco and your holdco, and that revenue is 90% or more in amount, then you can elect to use the election for D, I believe, the non-arm's length revenue election. There are some complications when you do the application, because that means you have to apply as the owner, and that also you have to kind of consider the same revenue for your CEWS application as well for that period. But when you do this election, you can kind of forget the holdco revenues and only take on those opco revenues.
Which is a little bit more information than we've had on previous webinars. But I think our best advice is still, if you're in this situation, really you kind of want to talk to your accountant, because of the complexities of, you know, if you make the selection, you have to do it for both the wage subsidy and the rent subsidy. So we are still working on a simpler path for this, but we haven't crossed the finish line on that with government yet. I've got a couple of other rent questions, Rachel, that I'm going to stick with that theme just for a minute, and then we'll go to Corinne and talk about some of the other programs. But I've got sort of two, one from a tenant perspective and one from a landlord perspective. So I'm going to go to Adam's question first, which is any recommendation about what to do when your landlord asks for full rent when you are on lockdown, and he's currently offering him 100% of the rent subsidy he's getting, with a promise to pay the balance when open again. So this is a tough situation, and this is a question we got right from the beginning, like involving the landlord-tenant relationship. What kind of advice would you give Adam in that situation? And then maybe I'll chime in too.
Yeah, it's really tough, and keeping those lines of communication with your landlord are definitely key, because there's a lot about this program that the landlords don't understand as well. They don't know how much, like not everybody is going to get 90%, and it's based on your revenue drop. That's something that a lot of landlords aren't aware of, and of course everyone's just still trying to muddle through the rules. So definitely keeping in contact with them and just being frank about your situation and what you can afford right now, and seeing if there's a halfway, because that's really the way business should be done, right?
Yeah, and that's our best advice. And of course, it doesn't help a lot if you're dealing with someone unreasonable, but it is true, Rachel, and I think we underestimate this sometimes, that the other party doesn't always know exactly what the details are. Like, for example, that you're not getting 90%, that maybe you're getting 40%, and you are giving them every every bit of what you're getting. So I think that's probably our best advice, Adam, and I hope that that's helpful. Just keep trying to keep that line of communication open, and try to keep it open with so hard to be in neutral when you're really feeling anxious about it as well. And so sometimes even having someone else help you with that conversation to keep you calm can be useful, practical advice. Now I'm going to kind of flip perspectives here. So Richard is asking from a landlord perspective, what happens if a tenant is eligible for the rent subsidy but doesn't pay their rent doesn't basically use it to pay their rent to the landlord? Like they're you know, that's another tricky scenario. And Rachel, maybe you'll take a crack at it first.
Yeah, it's also that one's really tricky as well, because it's uncertain as to whether that tenant had received the CEWS yet, or if they're just using it for other purposes, and that's kind of hard to double check, because you can't really just ask CRA for another business's personal information, right? So again, trying your best to have that conversation, keeping those lines of communication open. Because really we have heard from other businesses that they still haven't received their CEWS, and maybe this is because they still haven't gone through their pre-validation. We know CRA has tried to open this up really quickly, so they're getting an influx of CEWS applications. So it could be for multiple reasons. So really only communication is going to figure that out.
Yeah, that's right. So, I think starting with words like reasonable and fair, like we want to be reasonable, we want to be fair. These are words that really appeal to most, reasonable people. But understanding if they are eligible, have they applied, and where's that at, and what kind of agreement? Like, let's get some clarity to what we can expect in the relationship. The other thing I will say is that if you are getting CEWS, you are attesting that you will pay the full rent, which is a little bit, that's a whole separate issue that we're dealing with. Because in some cases that's putting people in this awkward position where they want to pay as much as they're getting, but they can't pay full rent, and both landlords and tenants are raising that issue with us. So we're working on that issue. But you are attesting that you'll pay rent, and again, so that does mean that there's the potential for audits after the fact. So both landlords and tenants can be aware of that. Although we haven't heard anything, Rachel, I don't think, about how the auditing might proceed, or what other recourse there might be for landlords if their tenants have received CEWS and not used it for rent. So that's what we know on that one right now. Corinne, are there some that you want to put in?
Yes, I have quite a few questions about the Canada Summer Jobs Program. So I'm wondering, Rachel, I don't know if I have all the answers, so I'm hoping that you may be able to help answer some of these with me. So Jimmy was asking about Canada Summer Job Grant extended to February, I think, 2022. Does that mean it starts from April and covers up to February 2022, or a maximum of 25 weeks between April and February? Do you know that, Rachel? If not, we can maybe try to get back to you, Jimmy, on that. Do you know off the top of your head?
I can't remember off the top of my head,
Okay.
but I do have the link for it. If you send me that question, I can forward the link where it has that information.
Yeah, and then another one David was asking about, can we hire our son under the Canada Summer Jobs Program, is another one that has come up.
Yeah, that one's actually one that I'm still waiting on an answer about, admittedly, because that has come up through our phone lines. And admittedly, the answer right now is I don't know.
Yeah. Okay. Yeah. So there's one we're trying to get an answer for. And then Juanita was asking, one of the criteria for eligibility must have 50 or fewer full-time employees. Is the 50 per company or total employees for all related companies?
Yeah, so there are more rules in the guide to the application. I know that it is across Canada, the 50, and if you have a franchise, it's the 50 across the franchises of the owner across the country.
Okay. Okay, so I think that covers quite a few of the questions I was getting on that. I also have a number on the Ontario Small Business Grant. And I just wanted, I don't know how much you're aware of that grant, Rachel. So
Yeah, I mean, probably better to try it and not.
So Lena was saying for businesses in the hot spots in Ontario that were mandated to close before December 26th, they are not eligible for the new Ontario Small Business Support Grant. Do you know why? As a gym owner in Peel, I've been closed since the 23rd of November for the third time and can't seem to understand why I'm not eligible to apply. Do you have any?
I'd probably say because I've heard different industries aren't eligible for this program, and that's something that we're definitely keeping track of on our end as well, because I know our Ontario lobbying team is definitely pushing for some of these things to change. So thanks for sharing that with us. If you can share what more details on your situation, then we'll for sure get you to our Ontario team so they know about your situation.
Yeah. Okay, and I'll just touch on a couple more before I get back into sort of the programs themselves. A couple of businesses here, Mike was asking that it says the Victoria Chamber of Commerce is predicting no international travel to Canada for 2021. Do you know if the feds will be initiating any new programs for tourist-related businesses? And I had another similar question from someone else in the tourism sector. And I did want to say that the tourism sector is one that the government has identified as a highly affected sector. And there is supposed to be a new program starting hopefully in the near future called the Highly Affected Sector Credit Availability Program, where they're going to provide low-cost loans supposedly fairly easily to businesses mostly in tourism and hospitality and arts and recreation. It's not yet available. Hopefully it'll be available soon. It is one on our radar too, to say to government, when are you going to put this one out? Because there's lots of need. And I think the tourism sector in particular, excuse me, has felt sort of left out of some of these programs, given that so many of them may not be officially required to close, but are essentially closed because they don't have any customers. And so that's the challenge. Again, another travel agency has told me, in that one of the questions that they are, do they get the lockdown support? Unfortunately, the government is telling us that they don't get lockdown support because they're not officially been required to close, even though they have no clients because nobody's traveling right now. So those are the types of industries that we're hoping some of these new initiatives will be able to help, but they're not yet available. So I want you to know that there is some stuff coming. And as soon as we hear more details, we will be including them in our webinars in the future and getting that information out to our members through as many means as we can. So I just wanted to touch on that too. So back to you guys.
Yeah, I actually have a question on my end here about the CEWS.
Yeah, hang on, okay. Before we get to that, I've got one I just want to put out there that I told Jane I would put out there. Can we poll if anyone has received Canada United Small Business Relief Funding? We were approved and sent in our information shortly after receiving notice of approval, but have heard nothing further in over a month. So I'll put that out there because I know sometimes people then respond, and that's very helpful. So Jane, we'll see if anybody has heard. I don't know if Rachel, we've heard anything like that through the or I guess Rachel's disappeared, so I don't know.
Yeah, can you still hear me? Can you still hear me?
Yeah, I think you are.
Okay, perfect.
I don't know if you've heard anything about that through the helplines, either the Canada United grants, because that was a little while ago that those grants were being offered, and again, Jane hasn't.
Yeah, so maybe what I would ask Jane to do is just let us know what her application number was, or her business, more information, and then we can touch base with some of our colleagues over there and see if they can reach out to her at the Canada United. I know that was a program that ran out really quickly, and they didn't necessarily have the capacity to reach out to people to let them know about the status of their funding or not. So yeah, we're happy to try to make that connection to see if she can get an answer.
Okay, and Rachel, I think I cut you off by interjecting Jane's question, so go ahead. I apologize for that, and put your question in.
Yeah, that's completely okay, Laura. Yeah, so I think Sharon, you have a really great question that says that your year end isn't necessarily December, the end of December. Can you still include the CEWS as revenue in Q4 despite getting it earlier? And the answer should be yes, as long as it's within your year end period, you should be able to include it. So hopefully that helps.
Great. And Corinne, Andrew has a good suggestion for the new businesses programs, like if new businesses become eligible for CEWS, he's asking, will it be retroactively applied, because he's been struggling with 2 new businesses since August and 1 in October, I guess. So that's a really good suggestion, I think, that retroactive support for those businesses once they get them.
100%. Yeah, we would agree. The CEBA, I think, would be no problem, as long as it's done before March 31st, because that is the deadline right now for the CEBA application loans. For CERS and CEWS, definitely we'll be pushing for it. The deadline to apply for CEWS for the first 5 periods, though, which ran until July of last year, actually ends at the end of January. So that's going to be a bit more challenging, but I think for sure we should be pushing for full retroactivity, and if not that, at least partial retroactivity. But we continue to even just try to get something for new businesses. We are hopeful, to be honest. We had some positive feedback prior to the holidays that the government is invested in this issue and is looking for solutions. But unfortunately, since the holidays, it's been crickets. So we're going to try to hopefully next week hear more as government starts to kind of get back into the swing of things. And this will be one of the things that's on the top of our list.
Great.
I have another question, actually, and it's one that seems to be a bit popular, but a few of you are asking about the PD27 and why is it paid and not earned income. And from what we've heard from our CPA, our payroll counterparts, is that this was done in paid, just so that the payroll companies could facilitate this for businesses. So maybe that's something we should ask them next week, because we'll probably have them on, but definitely a point of confusion for sure, and a bit of frustration, because most of the CEWS and CERS are compared, or they require earned income.
Yeah.
Corinne, there's a number of comments on the revenue comparison issue. And I think Bruce is putting it well when he says that shouldn't 2021 revenues be compared to pre-pandemic revenue numbers? I would argue that revenues started to decline in February, not just the official declaration of the pandemic in mid-March 2020. Any thoughts on this? And it's a good point. I know you said that hasn't been clarified yet, like once we get into March, but Bruce is raising an interesting question that even February is a bit problematic.
Yeah, I mean, and right now they are using February as a reference point. The good news is, though, you can use February or January, right? So you're not stuck with only using February when you get to your March period. You'll have the choice of using either January revenues or February revenues. So if you're, much higher revenues in January, you can compare them to your February 2021 revenues rather than the February 2020 revenues. So it's a good point, one that we can raise, but I suspect that'll be the response back, is that there is a choice there. You don't have to use February, you can use January instead.
Right, but of course, as we get further in, it becomes, if they don't clarify that it's pre-pandemic, that point is very important. And I know one you're raising and very aware of, but
for sure. Yeah.
Okay. Anything else you want to cover off, Rachel?
Not that I can think of right now.
I know we typically, for those of you who are new to our webinars, go a little bit over time. We don't go more than quarter past the hour, but we do, there's tons of questions piling in. And of course, we always feel badly when we can't answer every single one of them. Maybe I'll throw a couple more in, Corinne, and then if you have any, and then we'll wrap up. One from Rosemary: can landlords increase your rent during COVID?
So
you pay full rent.
Yeah, I think that one's probably for me. Essentially, when you're I mean, it depends. Are we talking about in the scope of during a COVID program using the CEWS, or are we talking about in general where you're not using one of those programs? And so if you're not using one of those programs, it's kind of business as usual, right? If you are making use of the CEWS, it's supposed to be using the what you paid and using a contract or agreement that you had in place before September. So that's definitely a consideration to be made in your situation.
Great. Thank you. You know, getting a few on the Ontario grant, including one from Tony and the eligibility. So all of you who are worried about not being eligible for the Ontario grant, have no fear. We'll be discussing that with our Ontario, our lead lobbyist in Ontario. His name is Ryan Mallow, and he's terrific. You may have seen him in the media if you're in Ontario, and I'm sure he's already on this, but we'll make sure that your comments get to him. And as we make this comment all the time, but your comments are so helpful because we plug them straight into, this is what we're hearing directly from business owners, and that carries a lot of weight with government. Thank you for that comment, Tony, and thank you to all of you who are making comments, even though we won't get to all of them. Okay, I think, Corinne, I'm going to ask you if you've got any others, and then we'll wrap up.
Well, I got lots and lots of others, unfortunately. Lots of questions around the CEWS non-deferrable expense stream and whether certain types of expenses are eligible or not. So my suggestion, and there's a number of them, is to either call our business helpline or call the EDC business helpline. Both of those may be able to help you a little bit on that front. You may even want to try the EDC one first because they don't necessarily pick up the phone right away, but they are calling people back within 24 hours. And then they can give you more of the official line. But if you're still not, you know, if you still feel like there's something there, certainly you can give our team a call as well. So I just can't get into the many that are happening here right now. Also some questions around what you can claim for your, once it comes to subsidies, not just the CEWS subsidy, but the CEWS and the CERS subsidy. When do you claim them? You claim them all in the year you receive them. So it's very important that if you have a wage subsidy that you received, all of the wage subsidies you received in 2020, all of the rent subsidies you received in 2020, and the forgivable portion of a CEWS loan that you got in 2020 all have to be included as revenue for this year when you do your taxes in the next for your next tax round. So it's really important that you do include them as revenue. So that's another one there's been quite a few questions on that too that I just wanted to make sure we were clear on, that it wasn't just CEWS, it was all of the subsidies as well that have to be claimed in the same way.
Corinne, if I could just jump in, I just wanted to mention that on our CEBA website, the CFIB one, we've also included a chart based on what we know so far, and I think it's a little bit more clear about what is an eligible non-deferrable expense. But if you hear you want to add to that list, let us know, or yeah, hopefully it'll help you, because we know that their website isn't entirely the most clear.
Yeah, and then I've had,
Oh, go ahead.
I was going to say, and then I've had a few questions around the CEBA extension and when they're going to get to actually fixing it. So yes, it's coming. We know that they've started on some of the smaller ones. They're hoping by the end of the month to get to some of the more, the ones that are a bit more around where there's a discrepancy between what CRA is telling them and what you're telling them. So hopefully it's just like a thick thumb sort of issue. But there may be some that may not be rectified until February. So I want to give you that warning, but we're again putting a lot of pressure on them to get the information out there. Your bank will tell you when you can start to reapply, because you may have to reapply, but it will be the bank that will get in touch with you. If you haven't heard from the bank by the, say, February 1st, then call the CEBA call center and they will tell you what's happening at that point in time. I hope that clarifies things a little bit.
Great.
Maybe just a follow-up question to that, actually, because I did have a member here who asked, is there going to be an extension to the deadline for the CEBA? And I know we haven't really heard anything on this, but it seems like things are still being worked on until February. So what are your thoughts on that?
Yeah, I mean, the deadline for CEWS applications is March 31st. So we have a bit of time still ahead of us, but they have been pretty good at pushing back deadlines as we've been moving. So if necessary, we'll again suggest that they need to push it back further. Remember, at the same time, we're still asking for more, like another 20,000. So if that does happen, it'll have to be pushed back further again. So we'll continue to monitor that closely. And if we think it's necessary, we'll certainly put more pressure on government to do that.
So Denise is weighing in on the Canada United issue, saying that they told her they have a huge backlog and it'll be a couple more months. So that may be helpful for those of you who had that question. So thank you, Denise, for that. And I have one more I'm going to sneak in, Rachel, from Elaine. Is rent relief compared to the full month of last year? I know the rent relief is weird because they wanted to line it up with they're not doing month by month, they lined it up with the wage subsidy periods. But she's asking, we were debating whether to offer curbside pickup in February, but it doesn't make sense for us because our rent is so expensive. If it is based on the full month of last year and not weekly or daily, it just doesn't make sense, is what she's saying. And so it's kind of complicated, right? Because it is a month, but it's not the calendar month.
Yeah, so actually when we're talking about the revenue drop calculation, it is based on the calendar month. But when we're talking about expenses, that's when we're talking about the CEWS periods, and that can be rather confusing for sure.
Right, but it is essentially a monthly comparison, not a daily or a weekly that you're looking at. I think that's, Elaine, I think that's your question. And to answer that question for you, hopefully that answers it. Any last questions before I wrap us up, Corinne and Rachel?
I have maybe one about, again, the PD 27, which we'll be talking about next week. But a few people want to know if there's a deadline to apply for, to remit it. And the answer that CRA has provided is as soon as possible, because it is needed for a T4 summary to be provided. And as we know, the T4 summary matches the T4s and whatnot. And you just want to make sure that you don't get a note from CRA saying that there's a discrepancy in your file. So getting that done sooner than later is, again, probably the best advice.
Great. Okay. Corinne, any last questions before Okay, so Rachel, why don't I have you make some final comments, and then I'll go to Corinne, and then I'll bring us home. And for those of you who had questions that we didn't answer, we will look at them, try and pull some of them into next week's webinars or FAQs, and get you the information that you need, hopefully soon.
Yeah, sounds good. Yeah, so probably best piece of advice for this week is stay diligent. Have courage in doing these painful calculations. CRA has now and is slowly coming out with more and more information on how to report your taxes. So get on that early before the craziness starts and your accountant is no longer available for you and things are too difficult to figure out. Try to get this done earlier than later. That's probably what I'll say. And stay safe and stay sane.
That's good. Stay safe and stay sane. I like that. Corinne?
Yes, again, thank you. There's lots of great questions here, and as Laura said, I think there's lots of stuff here that we could potentially build into future webinars as sort of FAQs, because there's lots of repeat questions and a lot of things going on, and clearly there's still a huge need for many of these programs and what they offer. I am seeing a lot of concern over deadlines as well and when they're looming. And so that helps us to understand the need to where we can push governments. Deadlines are easier to deal with than trying to get them to expand programs. So those are the things that we can hopefully do a bit more on. So thank you again for all your feedback. It is essential to the work that I do. And I do want to encourage you to continue to fill out the surveys because they are also a key piece of everything that we do and are used heavily by the government to make their decisions. So thank you again for joining us, and I hope you're able to join us again in the future.
Thanks, Corinne. And thank you on behalf of the participants for all the hard work that you do. And thank you, Rachel, too, on behalf of the participants. I know there's a lot of grateful comments that we receive about the webinars. But I just want to wrap up in saying, hang in there. The days are getting longer. There's more daylight. So it's not like there's no good news out there. The cases are coming down in many parts of the country. Vaccines are rolling out, albeit more slowly than we would like. But we are going to keep the pressure on, and we understand that the health crisis is part of it, but the economic crisis is its own predicament, and that even once the COVID health crisis storm has passed, that the recovery is still in front of us, and the cleanup from that storm is a big job. And for many of you, you're left with, you're exhausted and left with debt and other things. But hang in there. We're getting there. We're getting there, and you've got us in your corner for sure, and we hope to see you next week. Don't lose hope. That needs to be infinite, even if frustrations are here with us today. And so don't lose hope. And that's probably the last word for me for today. Thank you all very, very much, and thank you for your questions and your great contributions. As Corinne said, we use them, so don't feel like if you've asked a question and we haven't answered it that we're not paying attention to them. We read them all, and we are trying to answer as many as we can, and also using them with governments to get answers. So thank you very much this has been a fantastic collaboration, and Corinne and I and Rachel and I often say this is the highlight of our week. So we look forward to seeing you again next week. And with that, we'll end this week's webinar. Thanks, everyone.